Hello everyone, thanks for joining us today and welcome to this presentation of the secret ingredient your candlestick trading is missing. Now, candlesticks are probably one of the most popular venues for trading the markets. Virtually everyone these days is trading looking at candlestick charts, but it's been my opinion over the last 4 decades that most people apply candlestick trading incorrectly to their charts. In fact, let me show you this example here. Today I'm going to teach you what I feel is the correct way to apply candlestick trading. I'm going to show you what exactly is missing. As we look at this example here, this older chart of SYY, someone looking at this would say, well, actually, there's no trend, there's no direction here, what this stock wants to do. But I'm going to show you by simply adding this one ingredient, you could have been able to take advantage of this kind of sideways market in SYY before it took off and started to head strongly upwards. So stick around. This promises to be a great presentation. I plan to show you a lot of great new information. Hopefully it can elevate your trading and your consistency within your trading. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to my weekly webinars, we are all about educating you as a trader. We're a little bit different from other webinars and sites in the fact that we only want to educate you so that you can simply make your own decisions. You see, most traders fail, in our opinion, because they're taking their decision-making process from someone or something else. You're listening to someone in the chat room, going to someone on TV, following the news events, and that's how you decide on what you should be doing that day. But it's been my experience that that really holds no consistency, because if it did, well, then most traders would ultimately be consistent in their trading. And in fact, it's the opposite. Most traders fail within the first year of trading. So we feel it's because you're not supplied with the proper information to make your own trading decisions. So this is what we do. Now, I've been trading for 40 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist was, because there aren't a lot of them around anymore, it doesn't mean they were any more special than anyone else. It just basically means that they made markets and specialized in roughly about 50 stocks. So if you wanted to buy or sell that particular equity, you had to go to the trader who specialized in that, who made a market in that. Okay, so they still have them in New York. If you see the paper all over the floor and the guys yelling and screaming in front of the post, that was what a specialist did. Now, I traded as a specialist through the crash of 1987 and the bull market that followed. I left the floor in the mid to late 90s to manage money and pursue my own trading. And about 8 years ago, I teamed up with Pro Trader Strategies, and we developed Specialist Trading, which is strictly an educational company. All I do is teach and mentor our students in over 110 countries around the world and in virtually every state of the United States, all the things that I've accumulated in my 4 decades of trading that have shown high levels of consistency. Now, you're in for a treat today, because I'm going to be sharing with you a really great technique for trading candlesticks, and I'm going to share with you this one ingredient you've been missing that can really take your trading to the next level, in my opinion. But before we do, as always, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this secret ingredient, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So once again, we are required to show you this. So as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. You may want to copy down our handle right there if you haven't done so already. It's at SPCLSTTRADG. Every day I post new information, anywhere from signals that our strategies have generated to little bits of wisdom along the way. In fact, yesterday I believe I posted that one of our premier strategies had generated a buy signal in the market, and you see now what the market has done, making all-time new highs, and we were way ahead of the game there with one of our strategy signals. So lots of great information. Feel free to follow us on Twitter. All right, so once again, just to go over the philosophy, I'm going to be sharing with you a lot of things that have stood the test of time that my mentors taught me, but please remember that even though our company provides you with signals and with signal alerts and things of that nature, excuse me, we are more about teaching you how to spot and identify these things on your own so that ultimately you'll be able to do your own trading and make your own trading decisions. So we provide you all of this for educational purposes only. But as you can see here, our goal is not to force feed you signals. Our goal is not to tell you what the perfect time frame is. Our goal is not to tell you what the perfect market is. That's for you to decide. Our goal is simply to provide you with these things that for some reason you've never been taught, because we're always taught to follow conventional wisdom, which holds no consistency. But now we're really sharing with you these secrets that hold a very high level of consistency so that you can take it and run with it and be in charge of your own trading destiny. This is what was taught to me some 4 decades ago. This is what I teach to all of my students, okay? Now, since this is a class, we are an educational company and we're going to run this as if it is a class. We have a rather large group here. So if you happen to have a question, I love to take questions from you, but please remember that to hold the questions at the very end. Oftentimes, if you wait to the next slide, your question will be immediately answered. And if we wait for every question to be answered and stop and pause, this presentation will last hours. So we want to, give you plenty of time to trade for the remainder of the day. So just wait for the next half hour, 35 minutes. And then when we've concluded all the slides, then I'll take the last 15 minutes or so for questions, okay? So once again, kindly hold off to the end of today's class to ask any questions. The only one I will answer is the most common one, and that is this being recorded? Yes, it is. We record all of our presentations, so if you have to leave early or if you're having technical difficulties, just contact Pro Trader Strategies and we will send you the link to this, okay? All right, so once again, if you've entered late, just kindly wait till the end to ask any questions, and I'll go over each and every one of them. All right, so let's begin. Let's talk about candlesticks, since this is going to be, talking about a secret element to using candlesticks. Let's go over some of the most basic and popular of all candlestick patterns. I mean, we have anything here from doji patterns to piercing lines to evening stars. There are a number of ways to use candlesticks, and they've been very popular throughout the years. With the sake of not overcomplicating things, because at Specialist Trading, we're all about keeping things as simple as possible. We're only going to be talking about one pattern today. It's probably the most popular and the simplest one to identify. So we're going to be using the engulfing pattern for today's educational purposes only. But what I'm going to be teaching you can virtually be used for any candlestick pattern. But for the sake of those people who don't know a lot about candlesticks or aren't aware, let's just stick with one today to keep things as simple as possible. Now, if you're not familiar with what an engulfing pattern is, it's a 2-bar pattern. As you see here, bar number 1 and bar number 2. Now, this is a perfect example of a bullish engulfing pattern, whereas bar number 1, open to close range, is down, all right? You open and then close lower. And then bar number 2's open to close range is higher, okay? Where you open and then close higher. What we mean by engulfing is that bar number 2's open to close range totally engulfs bar number 1's open to close range, all right? It does not have to engulf the top of the wick or the bottom of the wick. We're only engulfing the bodies, okay? Now, when we see this, we have a high propensity for a nice upward edge in the markets. This usually tells us that we will be going up for the next 3 to 5 bars. It's not a system, it's not a strategy, it's simply a finely tuned way of discerning which direction the market wants to go. Now, what we've done many times is we tell our students that bar number 1 doesn't even have to be down. All we have to do is engulf the open to close range of bar number 1. So for all intents and purposes, this could be an up day as well. All you want to do is see is that bar number 2 open to close range on an up day totally engulfs bar number 1's open to close day. Okay, that's all. It can be either up or down. Now the same thing happens for a bearish engulfing pattern. It's a 2-bar pattern, and we have the open to close range of bar number 1. Bar number 2 is a down day. Okay, whereas bar number 2 on a bullish engulfing pattern had to be an up day. Bar number 2 on a bearish engulfing pattern has to be a down day. That's why we call it bearish. And so the open to close range totally engulfs bar number 1's open to close range. Now, the traditional way is for bar number 1 to be an up day, but it doesn't have to be. It could still be a down day if we wanted to. We just want to make sure that we engulf the open to close range. This is a high probability that the trend will be moving lower, okay? Now, the way they are explained to us in traditional trading is that this is some type of reversal pattern, okay? As we see the standard definition of engulfing patterns, engulfing candlestick pattern is a reversal pattern, usually occurring at the top or bottom of a trend, okay? So this is the way conventionally we trade all kind of candlesticks, but in this case, engulfing patterns as well. Because what happens is if you see some type of an uptrend, you're going to be looking for a reversal pattern at the very top of that uptrend to tell you that the trend has changed. So it's either time to get out of a particular position, or it's time to do the opposite, to short it. Conversely, if you see the trend going lower, you look for some type of a bullish reversal pattern, because this is telling you that we have now hit some type of reversal, that the downward trend is about to end, and now it's time to get in. So this is conventional wisdom of trading the engulfing patterns. This is the way I was taught 4 decades ago by someone who was trading from Japan, and this is the way most people are taught these days on how to trade most standard candlestick patterns, okay? So let's look at a chart here, a generic chart. We've specifically taken out what the market is because we don't want to confuse you to think that this only happens with currency pairs, only happens with stocks. It makes no difference. The point is, we see here that this particular stock is going lower, okay? And we're in some type of a short-term downtrend. Now, traditionally, we're looking for a reversal pattern. And what do we have here? We have our very standard and basic bullish engulfing pattern. So conventional wisdom tells us that this is a buy. This means we're going to be most likely stopping the downward movement. And this is a buy setup. This is a buy signal or some type of a red flag that the trend is going to be stopping. It's a reversal pattern. Most likely we're going to be reversing. So if you're short, it's time to cover, or more specifically, it's time to go long. Let's say you jump in and purchase here based off traditional candlestick wisdom, and look what happens. Look familiar to anybody? Now at this point, you're thinking, well, you know what? Maybe I got in just a little bit too early because the trend is still going lower. But what do we have here? Well, we have another bullish engulfing pattern. So maybe I got a little bit too early. I'll double down. I'll double my position and buy some more. After all, I don't need it to bounce up that much in order for me to recoup my losses or even just break even, right? So I'm probably getting in at the very low of the downward trend here on this reversal pattern. So you buy some more, and look what happens. Look familiar to anybody? This is the way I was taught how to trade candlesticks 40 years ago, and this is what usually happens. Because most people trade candlesticks by using this philosophy, that they are reversal patterns. But here's what I found out, and here is what I feel is the secret ingredient that's missing from candlestick trading. It's very simple, but very, very powerful. And that is, candlestick patterns will have a higher level of consistency if you trade them in sync with the trend. Now, this goes against everything we've ever been taught. Once again, I was taught this 40 years ago, that you always trade them as reversal patterns. But in all actuality, what I found out in that 4 decades is that the opposite. You'll have a higher level of consistency if you don't use them as a reversal pattern, but you use them to trade in sync with the trend. Okay? Now here's the only trouble. Everyone in the world has a different idea for discerning what the trend is. Here are some of the most basic trending tools. All right? You can use indicators. A lot of people like to use moving averages to find out what the short-term trend is. From anywhere from a 10 to a 20 period moving average tells you what the short-term trend is. A lot of people still will look at patterns. They'll say, no, Steve, higher highs and higher lows tell me that I'm in an uptrend, and lower lows and lower highs will tell me I'm in a downtrend. So they look at specific patterns within the actual chart to tell them what the trend is. Still, other people look at time frames. They say, well, you know, these things are okay, but I have to look at the higher time frame to be in sync with the lower time frame in order to find out what the trend is. These are all well and good, but they're very generic, and they will only give you a certain level of consistency. So the secret ingredient is to trade candlesticks in sync with the trend. But what will give us that high level of consistency? What is much better than these standard generic trending tools? Okay, well, here's the secret ingredient. You've heard me speak about this before, but I use this tool on a daily basis. I was introduced to it about 35 years ago, and I have not stopped using it since. It's the PET-D. Okay, it's our proprietary algorithm for defining the short-term trend. And what we've done is define it into a color bar tool. So when you see a series of green bars, that's all you need to know. You're in an uptrend. And when you see a series of red bars, you're in a downtrend. It's that simple. There's nothing you have to calculate. There's no particular time frames that you have to make sure that they're in sync with each other. There's no patterns you have to look for. There's no specific moving average you have to pick. It's all right there in front of you just by looking at the color. In fact, if we look at this older chart of Apple, we see here that it had a very nice run up last year, okay? And someone looking at this would say, yeah, but you know, it's too late now. It's had such a great run up, and even though it's moved up, you say, okay, well, I'm supposed to be in sync with the trend, so I'll buy it. And say you get long somewhere around here, okay? And it's working out okay. It's not going up as fast as it was before, but it's working out pretty well. You're still in the trade. You're making a little bit of money, and then all of a sudden this happens, okay? This is how the Pet D can help you. And remember, there's nothing you need to do except turn on and click on the Pet D button, and it automatically changes the colors of the bars to green or red. Now, as you see here, the Pet D was signaling an uptrend well in advance of the strong upward move. And even though it's not, positioned to tell you where the top is or the bottom is, it will oftentimes, because it's so sensitive, get you out in advance before a strong trending downward move happens. So as we see here, right here was when the Pet D told us with these 3 green bars, well, we have confirmation that we're most likely going higher. And with 3 red bars here to give us confirmation well in advance of the sharp move to the downside. So you see how powerful this tool is. You see why I haven't stopped using it, and that there's other tools I've heard about in the last 35, 40 years, but I won't let go of the Pet D because it works better than anything I've ever seen or traded with. So how can we apply it to our candlestick trading? What is the secret ingredient that's going to really ramp up our odds for consistency? Well, here's the process. If you have a bullish engulfing pattern, and remember, this can be applied to virtually any candlestick pattern, but because we're just sticking with one today, here's the way you would use it. The candlestick pattern is, once again, a 2-bar pattern. We're only going to buy if the engulfing bar, or bar number 2 in that 2-bar pattern, is colored green. That's it. It's that simple. Remember, we want to keep things as simple as possible. You don't want to overcomplicate your trading. So if you see that 2-bar pattern, and if bar number 2 is green, well, it's giving you confirmation to buy it. You don't have to wait for an uptrend to take place. So as we look at that chart we showed you in the very beginning of the presentation, someone looking at this would say, well, Steve, I like to look at a moving average, and the moving average is basically going sideways. Or I like to look at the higher time frame. It's not in sync with this. There's really nothing happening, so there's no trend here. Well, that's not really true, because according to the Pet D, we have a bullish engulfing pattern here. And guess what? Bar number 2 is colored green. We're not concerned with what happened well before that in advance. All we're concerned with is bar number 2 in this 2-bar pattern. So now that we see that bar number 2 is colored green, that gives us the green light to take the trade. And in the next week, the stock gained 5 points. That's all you need to know. You don't need to look at news. Excuse me. You don't need to be listening to some guy in a chat room or some guy on TV. You don't need to follow earnings. Just know that the Pet D is so sensitive that oftentimes it will tell you in advance of what the trend is going to be. Now, the same thing works, except on the opposite side of the coin, for bearish engulfing patterns. So if you get that 2-bar pattern, we're only going to sell if the engulfing bar, bar number 2, is colored red. Excuse me, I'm losing my voice already this early in the presentation. Let's look at this older chart of DVN. All right, obviously we're in some type of a downtrend, okay? Now, conventional wisdom would tell us, well, we are only looking for bullish engulfing patterns. So we're going to bypass these bearish engulfing patterns because you don't want to sell in a downtrend. We're looking for buying or picking a bottom in a downtrend. But that doesn't work. Remember, there's no consistency in trading that way. So we're going to go in sync with the trend. So even though we can kind of see we're in a downtrend, we want a little bit more confirmation. Let's add the Pet D. And it's safe to say that we've been in a downtrend, obviously. All the bars have been colored red, and bar 2 is red in both of these examples. So look what happened quickly. We went straight down after that. So at this point, you're probably saying, boy, this Pet D works fantastic. But you're still not convinced. You've got a nice profit under your belt, and like most traders, you're always trying to pick tops and bottoms. And what do you have here? You have 2 bullish engulfing patterns. And you said, well, you know, it's got to work here. We've had a real nice move to the downside. I'm just going to buy here because we've got 2 bullish engulfing patterns right next to each other. It's got to be some type of a bottom, right? It's best not to take those. Don't fight the trend, because look what happened. You would have had a losing trade, most likely given back everything you made on these first 2 signals, and it would be much better to be in sync with the trend. Here's another sell signal, in sync with the trend, and you could have captured more points. In fact, 25 points altogether in just 2 months. So do you see what we mean by when we say this is the secret ingredient that's missing? Most people use candlesticks, any candlestick, either doji or a piercing line, anything you want to think of, as a reversal pattern. But candlesticks will have a higher level of consistency. It's been my experience and my trading experience in 40 years if you trade them in sync with the trend as opposed to trying to pick tops and bottoms or reversals within the trend. Let me show you some more examples to share with you what we feel and how we really feel so strongly about this and how you'll see the consistency. Let's look at stocks first. And here's another example of a sideways market in Nike. This was just about a month ago, about 3 weeks ago actually. The stock appears to just be going sideways. It's just in a range pattern. So most people would not be anywhere near interested in doing anything here until you have a breakout either to the upside or to the downside. But that's not the way we look at it. We look at trading not for what's happening on the outside source's opinion, but what the market is telling us. And the market is telling us, well, here's a bullish engulfing pattern, and the market is telling us through its translator, the PET D, that bar number 2 is colored green. So that's telling us this stock wants to go higher. You see, we don't need to listen to earnings or anything else. We just need to listen to the market, and it's telling us it wants to go higher. So the stock gained 4 points within the next week or two. Very simple. How about HRB? All right. Now this stock is more or less following the conventional pattern of candlestick trading, and it's in the fact that it's going kind of sideways to upward, and we're met with a reversal pattern, a bearish engulfing pattern. That's okay. We're not going to say that that won't work. We just want to use our secret ingredient, which is the PET D, to make sure we're in sync with the trend. All we need is for that second bar in the pattern to be colored red. So if we add the PET D, well, we see that the entire time we have been green, but bar number 2 is colored red. So this gives us the confidence to actually take this as a sell signal, and the stock dropped 4 points in the next 2 or 3 weeks coming into the middle week of February. Now let's look at something that goes entirely against conventional wisdom in trading candlesticks. As we see here, Facebook at the beginning of the year was headed lower, as exemplified for all the red bars here, but then it changed its direction, and for the last week or two, all the bars have been green. Okay, so this is telling us that we are in an uptrend, a short-term uptrend, but at least it's still an uptrend. Conventional wisdom tells us, well, now you have to look for a reversal pattern. But what do we have here? We have a bullish engulfing pattern. It's telling us it's going higher. So if you were trading candlesticks the conventional way, you would not take this. But according to what I just shared with you today, this is a real strong message coming from the market, the stock, that it wants to go higher. So you would actually go long. Even after Facebook has gone up for some time, you still want to buy this, and the stock continued up 12 more points in the next month and a half coming into March. The beauty of this technique is that the PET D remains green all the way up. And so that means it's giving you many more chances to get in. If you missed that one setup, if you weren't strong enough to take that, you felt too uncomfortable, well, guess what? You had another one right here, and even still another one right here. How about PRGO? Now we have mixed signals here. Initially, we are going much lower all the way to the downside, and here's a bearish engulfing pattern at the top that worked out very nicely. And then at the very bottom, we're met with a bullish engulfing pattern. Remember, in the 2-bar pattern, it does not matter according to our rules what direction bar number 1 is going. All that matters is that bar number 2 is an upward day, and it engulfs the open to close range of bar number 1. But how could we have known to take these trades? And what would have given us the confidence to do it? Well, if we were going short, we would have needed this bar to be colored red. And if we were going long, we would have needed this bar to be colored green. So let's just add the PET D color bar tool. And both of them were totally in sync. You had 11 points to work with on the downside, and then another 9 points to work with on the upside. Now let's look at a current chart of Apple here. All right. Now this is coming into the 2nd or 3rd week of January, a couple of months ago. Now, Apple was slowly but steadily headed upward, so it's in some type of an uptrend. And what do we have here? We have a bullish engulfing pattern. Most likely, if you're trading the traditional way of trading candlesticks, you wouldn't have taken that. You're looking for the opposite, a bearish engulfing pattern. But if we apply the PET D, what color has the PET D displayed for the last month or two? Green. So even though we had some type of range motion here coming into the new year, it was still saying Apple is in an uptrend. Do not short it. And then when we got this buy setup here, this is telling you it's time to go long Apple. And stock went up 18 points coming into March. Okay, so you had, I'm not saying you would have said, well, I'm getting out at the 18-point mark. No, you could have had 18 points to work with. Some of our students get out with a point gain and say thank you. Others try to squeeze as much profit as possible. Remember, we stated at the beginning of this presentation that it's not our job to tell you where to and how to trade. Our job is just to provide you with the information. So tons of different exit levels, tons of different entry points, and then have you decide so that you can be in charge of your own trading destiny. We're not going to sit here and tell you how to trade. We're going to give you all the different variables so that you can decide. And here's an older chart of ZBH. Someone looking at this in hindsight would say, well, yeah, Steve, it's easy to see that this was in a strong uptrend. I would have loved to have gone long here, but you actually could have taken advantage of that by simply adding the pet D and then looking for all of the bullish engulfing patterns circled in green here. That's 23 points to the upside in 3 months that you had to work with. So do you see how simple this is with stocks? Let's transfer over to some other markets just to show you that it just doesn't have to be stocks that this works so well with. It can be multiple different markets. If we look at an ETF here of the S&P index, the spiders, this is an older chart. We see here that we had the bearish engulfing pattern and bar number 2 is colored red. Now, even though it looks like there's no clear-cut trend here, this was a sell signal. And look what happened to the spiders right after that, represented hundreds of points to the downside in the S&P index. How about a recent chart of the QQQs, okay, the ETF for the NASDAQ index, all right? This is a weekly chart, so we're going back to July of last year, almost a year ago, all right? Once again, it looks like the QQQs are doing nothing, kind of in a sideways range, but what do we have? We have a bullish engulfing pattern. Now, someone looking at this would say, well, we're not in a downtrend. How can you buy based on that? Because we need to have a reversal. That's the conventional way of trading candlesticks. We don't hold any high regard for that because there's no consistency in that. Okay, it'll work every once in a while, but the times it doesn't work, you give everything back. So why would you want to trade a method like that? It's much better if you're in sync with the trend. Now, if you used the standard conventional means of defining the trend, you probably wouldn't have taken this signal either, because if you looked at higher highs or lower lows, there's no real clear-cut pattern here. And I'm sure someone would say, Steve, there's no trend, so I can't take this either. Well, that's not true if you have what we feel is the missing ingredient, which is the pet D. All we need is for bar number 2 to be colored green. Once we add the pet D, bar number 2 and that 2-bar pattern is, so that's all we need to take this buy setup. And as you can see, coming into March this year, it's been 20 points, a little bit more to the upside, representing thousands of points in the index, okay? Now remember, you can use this as a market directional tool. It doesn't mean you have to actually buy the QQQs on a weekly basis, but if you saw a buy signal on a weekly basis in the QQQs, don't you think that that would mean that the index is going to be going higher and that you may want to buy something within the index? Just a great market timing tool as well. Now here's a weekly chart of the 30-year bonds, okay? As we see here, at the very beginning in June of, I believe, June of last year, we had a bullish engulfing pattern, and bar number 2 is green, and look what happened to the bonds. Now coming into September of this past year, here is a bearish engulfing pattern. As you can see, here was a bearish engulfing pattern as well, but both bars were green, so we wouldn't have gotten involved in that until we had confirmation with bar number 2 being red right here. So that was a valid place to exit bonds and go short if you wanted to, and look what's happened coming into the new year. Okay, that's on a weekly chart. And you had other chances to get short or to sell along the way. See how simple it is. Once a strong trend takes in place, the market always gives you more and more places to get in if you like. Now here's a daily chart, older chart of soybeans. I don't trade soybeans, but I just want to show you this to exemplify how well it'll work on any market. It actually doesn't matter or care what market or direction, just as long as the pet D has some type of variables to do its calculations, it can give you the trending pattern for anything, whatever time frame, whatever the market. As we look at this daily chart of soybeans, we see we're basically going sideways. Conventional wisdom would tell us there's no trend, but we have 2 bullish engulfing patterns. Okay, so what would we do? Well, you just want to see that both of those second bars are colored green. When you add the pet D, well, they were. So that's giving you a clear-cut sign that the market wants to go higher in soybeans. And look what happened, okay? Do we follow soybeans at all? Absolutely not, okay? But look at all the chances you had to go long simply by using this simple tool on one simple candlestick pattern. You can apply this once again to dojis, to evening stars. It makes no difference. We look at an older chart of crude oil. Safe to say it was going down last year really strongly. How could we have taken advantage of that? Well, look at all the bearish engulfing patterns here. We could have taken advantage with the red display here in the PET D. Now, a lot of people say, you know, Steve, I love your stuff. It has a certain level of consistency, but trust me, I've been trading long enough to know if a news event comes out, you're most likely going to be on the wrong side, because it usually happens and things go topsy-turvy and you're going to lose a lot of money. Well, I'm not here to tell you that every trade is going to be a winner. And in fact, if I did, I would caution you to run, because that's just, you know, for someone who's been trading for 40 years, I know that's not true. And anyone who tells you that you can have 100% winners, you should run. So losses will happen from time to time. But it's been my experience that the PET D is so finely tuned in translating what the market wants to do, going with our philosophy that the market usually tells you in advance what it wants to do, ahead of news, ahead of earnings, ahead of announcements, that oftentimes when they come out, when these news announcements do come out, you're on the right side already. In fact, let me show you an example here, what happened just a few weeks ago. Yahoo Finance reported that HP's earnings show that the PC market is finally starting to recover. Just a couple of weeks ago, the personal computer and printer maker Hewlett Packard on Thursday saw its shares spike after beating Wall Street's fiscal first quarter targets. At least 7 Wall Street analysts raised their price targets on HP stock after the company's quarter 1 report late Wednesday. All right. So after the earnings announcement came out, buyers rushed in. 7 analysts raised their price targets for the stock. All right, so that's good news. This is the way most people will trade. They'll see an announcement come out and they'll say, oh boy, I should get in now. Or maybe they were short the stock thinking that, well, you know, the trading room I go to was saying that they're going to have bad, earnings, so I should short it, you know, or based off the system I trade, it was too high anyway, so I've been short this stock for the last couple of weeks. All right, once again, the way 99.9% of traders trade, by taking their decision from someone or something else. We at Specialist Trading only teach our students all over the world to listen to one thing. That's the chart in front of you, the market you're trading. All right, it tells you most likely in advance what it wants to do. Now, first of all, we see here that we have a bullish engulfing pattern weeks before the earnings announcement came out. In fact, we don't just have one, we actually had 2. But that's still not enough for us to go long. We had to have it confirmed by our secret ingredient, the PET D. So both of those second bars needed to be colored green. So once we apply the PET D, guess what? They both were. So we knew 3 weeks in advance to be long Hewlett Packard. Now the stock gained 15% in just 2 weeks. Well, we knew that in advance before the earnings came out. We don't even follow earnings. We don't suggest or require any of our students to look at any earnings or news events. Trust me, I stopped looking at the news almost 40 years ago. So if I've still been able to trade for 40 years, why should I tell my students to look at any news? It's not required at all. If you're an investor, if you're holding positions for 5, 10, 20 years, sure, you need to know about the inner workings of the company and the economy or what's going on in the world. But if you're trading things for a matter of days, months, weeks, it makes no difference what the news is, because the market is telling you in advance what it wants to do. The only trouble is we've never been trained to listen to what the market wants to do. We're always trained to listen to some guy on TV. We're always trained to wait for the earnings. We're always trained to look at some convoluted logic or somebody in a chat room. But we never do the most important, which is listen to the chart right in front of us. It will tell you just about everything you need to know. All right, let's look at a different market here. Let's look at the Emini SP, all right? So if you're an intraday trader, here's a recent chart of the 60-minute chart of the Emini SP. As we see here, we had straight up market and then straight down. How could we take advantage of this? Well, see how the PET D was telling us in advance that we were green, and well before the market fell out of bed, the majority of bars started turning red. As we were going up, well, look at all these bullish engulfing patterns we had. We had 20 points to the upside to work with on an hourly time frame. And then once the trend changed, the majority of bars turned red. Well, look at all these setups we had to take advantage of to the downside, 20 more points. And this is all just in about 3 or 4 days tops. Now we can go to a smaller time frame. Here's a 5-minute time frame. Obviously, the market's headed straight down. Okay, there's no real need to figure out what the trend is, because it's just really moving with a lot of volatility to the downside. But the pet D knows in advance on the first couple of 20 or 30 minutes that the majority of bars are red. So we know well up in advance to take advantage of all these signals to go short. Okay? That would have been 30 points had you taken the very first setup, 30 points you had to work with to the downside, $1,500 per contract. Now let me share with you what happened yesterday, because those were older charts. Let me share with you what happened yesterday in the first hour or so of the day. This was on a tick bar chart, and as we can see, we gapped lower on the days. You look in the bottom, this is 228. And nothing much happened after that. We pretty much went sideways for the next 2 or 3 hours, okay? Pretty much just a sideways action. So someone just looking at this would say, well, until we have a breakout to the upside or to the downside, there's no real discernible trend here, all right? We're not really giving us much information. So Steve says to listen to the market. Well, the market's telling me there's no trend. Well, actually, the market is giving you more signals than that, because it's giving you a bunch of bearish engulfing pattern signals. So it's pretty much telling you that it wants to go lower, but we have to confirm it. We have to put in our secret ingredient and make sure that that second bar, that down bar, is colored red. So once we add the pet D, guess what? Each and every one of those setups is colored red. And look what happened. By the end of the third hour, well, that was 8 points to the downside. That's roughly $400 per contract. Now, I know it's not a lot, but had you traded 10 contracts, $4,000 by the first 3 hours of the day, that's not bad. Now, I'm sorry, because I was putting this presentation together for today. There were a lot of buy setups using a bullish engulfing pattern on today, intraday trading of the E-mini futures. So I'm just going to give you a heads up. If you look at a 5 or a 10-minute chart or even a tick chart of the E-mini today, from where it opened, all of the bars are virtually green. Okay, so we don't have to tell you anything. In fact, they were green coming into today. So we know that we're in an uptrend on an intraday basis. See if you could have done well using this technique where you're looking for a bullish engulfing pattern on any intraday type of charting setup you wanted to see. There's so many setups using this. This is the secret ingredient we're trying to share with you today. Now, I know some of you even like to trade Forex markets. Does anything have to change because we're switching to currency pairs? Absolutely not. Let's look at a daily chart here of the euro dollar, okay? Well, it looks like we were going up and then it kind of headed lower, so really no idea what's going on, but there's a bullish engulfing pattern. So if we apply our pet D, we see here that bar number 2 is green. That's all we need to go long. 600 pips in the next 3 days, or roughly about $6,000 per contract. We can go to a smaller time frame. Here is a 60-minute chart of the British pound, okay? Safe to say we're going lower, but how could we have told we were going lower way up at these higher levels? Well, let's add the pet D. Wow, the majority of bars are red, so we know that we're in a downtrend. Now, we can find a bearish engulfing pattern here, another one here, another one there, and look, all the way down, 200 pips in 2 days, okay? $2,000 you could have made on an hourly chart. Still, we can use this on a monthly chart. Here's the dollar yen, okay? Just off of the limited amount of information we're given. We have monthly bars here and a bullish engulfing pattern, and bar number 2 is green, all right? This is going back to September of 2013 on a monthly time frame. Look at the nice move to the upside coming into the middle of last year, all right? That's 4,500 pips to the upside, or $45,000 you had to work with. Once again, we're not saying that you would have held out that entire time, but look at how long the pet D remained green. Don't you think you would have wanted to stay in the trade if the market is still in an uptrend? This is the beauty of this tool. It's so simple but so powerful. It can be used in any market, in any time frame, and in any direction. So let's recap before I answer any questions that you may have. Remember, only buy or sell candlestick patterns that are in sync with the trend. And what is the best way for identifying the trend that I know of? It's by applying the pet D, the secret ingredient. This is the best thing I know of that tells you what the short-term trend is. It is that sensitive and it's that fine-tuned to translating what the market wants to do at the moment. It's not a predictive tool. It will not tell you how high or how low the market you're trading is going to be going. It just tells you at the moment what the current short-term trend is. That's how sensitive it is. It is translating what the market wants to do. It's not telling you what it's going to do. It's translating what the market wants to do. Now, there are very important points to remember here. This is not a complete strategy. We did not give you exact entry rules. We did not share with you where to place your stop because, as I said in the beginning of this presentation, not every trade is going to be a winner, okay? If anyone tells you that, you should run. We did not tell you and give you any exit points where you'd like to exit, all right? So we have to cover advanced entry signals. We have to talk about stop placement. We have to talk about exit signals. Where would you get out? And we have to talk about money management. How many shares, how many lots should you be trading? How do you protect yourself if you have a profit? All right, how much of your capital should you risk? These are all extremely important pieces of the puzzle that make up a great trading plan. What I've given you is just the real meat and bones of this, of putting together a strategy for identifying a high probability setup. But we still need these other things to come together. So here's what we're offering you today. It's called our Candlestick Combo. We're offering you one of our best candlestick trading methods, which is strategy number 5, okay? It's based off of candlesticks, and it's the only strategy we have. This just incorporates candlesticks alone. And as well, we are including the Primo Early Trend Detector. That's the PET-D. That's the proprietary tool that we put together for you that just simply, there's nothing you have to calculate. It's all right there for you. We give you instant course access, detailed instruction, 20 videos, and we include all the entries, all the exits, all the stop placement. We talk about how you can apply the PET-D with using different trading techniques. And remember, this includes both add-ons. You will get the up and buy indication for a strategy signal, as well as the color bar add-on that will change the colors of the PET-D from green to red. This is all included, as well as mentoring correspondence. All right, you can contact me via email with any question that you may have. But I think here's one of the best things about this. For a limited time, we're also applying you educational signal alerts, okay? These are educational signal alerts that will come when a signal is generated so that you know what to look for, because ultimately you're going to have to identify these setups yourself. This is what our goal is. So we're providing you for a short time signal alerts so that you can see when a valid signal has been generated. For example here, this signal alert was emailed out to our subscribers on the 8th, okay, of February this past month. And as you can see circled in green, UHS generated a strategy number 5 signal. That's our Candlestick Combo signal, all right? So it was a buy setup, and we generate all this information and send it out to you so you can check your work. Now, as you see here, once again, someone looking at this that wasn't a member of our courses or a student of mine would say, well, Steve, how can you say this is going to go up here? There's no clear-cut definition of the trend. We have no idea what's going on, and how do we know that this stock is going to go up? The earnings come out next week, so wouldn't you want to wait for that? Remember, we don't listen to outside sources. We only listen to one thing. That's the UHS chart in front of us, okay? And what's it telling us? Well, it's giving us a buy signal right here on the 8th. And so we can either enter on that day or on the next day, which would be the 9th, all right? So as we see here, if we add the PET-D, guess what? Where someone would say there's no trend, virtually all of the bars have been colored green. So the PET-D is saying the opposite. The PET-D is saying we're in a clear-cut uptrend. So I don't know what you're looking at, but the PET-D is translating that the market wants to go higher. Now, combined with one of our most consistent candlestick strategies, strategy number 5, this is a high probability trade that our members could have taken, and look what happened. The stock went up 9 points in the next week, okay? Now, remember, that's how simple it is, if you know how to listen to the market, though. So we teach you all of the rules to this particular strategy. We teach you all of the ways in which to apply the PET-D. And then included with that, we give you signal alerts so that you can check your work to make sure that you're in line with an actual signal that has been generated. Lastly, you get 40 years of experience as your personal mentor. You can contact me anytime you would like. Ask me any question. I was answering questions before I started this presentation today from our members in the UK. And so I answer any question that you may have if you're not sure about how to implement it or something still is a little confusing to you. Our courses around the world, if you look at Pro Trader Strategies, my sister site, you go to their testimonial page, extremely simple. The testimonial will say, I never knew trading could be so simple, because that's our philosophy. We want to keep things as simple as possible. So whether you've been trading for 20 years or 20 minutes, it makes no difference. Everyone gets the same basic package, the same basic benchmark strategy along with the PET-D. And then from there, we work out to meet your needs. As your mentor, I teach you how you can trade it conservatively, how you can trade it aggressively, different options for stop placement, different options for exiting, different options for entry. And so this is all meant and designed so that you can ultimately feel comfortable with the way you want to trade it, okay? So that's our special for today. We're offering you our Candlestick Combo, and we're giving you a great deal, but it's only for a limited time. For all the attendees in attendance today, we're dropping the price for one-time payment of $14.95 plus a small payment of $97 per month, okay? That's the beauty of this, because usually this package would run up close to $3,000 or $4,000 for both of these together. We're dropping it down to $14.95 plus a small payment of $97 per month. I don't think you can get 40 years experience as a personal mentor for anything that inexpensive. So here's how to take advantage of this. And remember, this is lifetime access to both courses. If you don't want to have the minimum payment and you don't want to pay the monthly fee, you can get both for a special discount of $29.95, okay? So if you're interested in taking your trading to the next level with the secret ingredient that I just showed you examples in virtually every market and time frame, contact Pro Trader Strategies, my sister site. You can email them directly or call them. Probably better to call them to set up that payment you'd like. And as you can see at the very bottom, we furnished you with the link that goes to the sign-up page. But I believe on the chat box on the far right, they have a live link. The link you see in front of you is not live. So we have a live link that you can actually take advantage of. Now, one thing I'd like to mention, what a lot of people always ask, so I'll answer this question before we get into it, the questions and answer portion. A lot of people always say, well, Steve, what can I run this on? What platform can I run this on? And so the PETD, as well as strategy number 5, works on MT4. It works on TradeStation, Metastock, NinjaTrader, Sierra Charts, and also Interactive Brokers, FCXM, Gain Capital, and Thinkorswim users. Now, Thinkorswim users can actually use the data for Thinkorswim to apply it on a free NinjaTrader platform, which we supply and we set up for you free of charge. Okay, so it's all done for using the data with your Thinkorswim, and then you can apply it to a free NinjaTrader platform. Now, a lot of our students say, well, Steve, I'm new to trading, or I don't have any of those platforms, but I'm interested in applying this. How can I do this? Well, we have a special offer. You can now sample our new PTS Primo Charts platform, and the charting has all this included. You can use it. You can use the PETD along with strategy number 5 free for 6 months, okay? So if you don't have any of these platforms, and if you want to trade with this, you want to see this, come talk to Pro Trader Strategies. We have a platform that you can be using free of charge, and this is all included free for 6 months. All right, it's a great offer, and you can start using this right away. All right, I'm going to leave all this information up here. Remember, this is a great offer, a one-time fee and a small fee every month, and you have me as your personal mentor included for life. So let me open up the question and answer box, and I'll answer your questions right now. Ruben asked, does this work on NinjaTrader? Yes, it does, Ruben. I guess you may have asked that before I answered, but yes, it does. NinjaTrader is great. We have a large portion of our students work with NinjaTrader, and they say it works just fine. Placide asks what charts you can apply to. Yes, we just shared with you the charts. I'll give you that rundown once again in case you didn't write that down. But the PETD and the strategy number 5 add-on work on MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, okay, Interactive Brokers, FCXM, Gain Capital, and Thinkorswim users can use it and apply it to a free Ninja trading platform. But you can also use it on and sample our new PTS Primo Charts platform. It's free of charge for 6 months. So this is a great deal. We set that up for you. We can have you up and running in a matter of minutes. So we have a great tech support. They can have you set up free of charge for 6 months. You can see the screens just the way it looked on what I was sharing with you today, okay? When you say, let's see, can you please explain again what the PETD is, and can I access that on any trading platform? The PETD, okay, thanks for asking. The PETD is a proprietary tool. It's a trend identifier, okay? And it's also a signal confirmation tool, but it's not a system, it's not a strategy. It doesn't generate buy and sell signals. So there are no false signals generated. It just tells you, you know, that's like saying the moving average generated a false signal. Well, the moving average isn't supposed to generate any signals. It just tells you what the moving average is at that point. The same way with the PETD. The PETD doesn't generate signals, so there's no way it can generate anything that's false. It just tells you, according to its calculation, what the market trend is at that very moment, okay? Now, the beauty of it is that it works better in defining the trend better than anything I've ever seen. Plus, there are multiple uses for it. There are different ways to apply it, which we show in the course. You can use it as a stop placement. You can also apply it for trading pullbacks, different ways, totally different ways in which to apply it. And one of the most powerful way is for identifying and confirming signals on candlesticks, which I just shared with you. So that's, I think, one of the most powerful ways in which to apply it. But it is not a strategy or a system. It's a proprietary algorithm that is based off momentum. We're not giving away the rules, but you know what? It's not really about the rules, because I can guarantee you, if you knew the rules, you would most likely lose money, because most people don't know how to apply it correctly. And that's what you're getting. You're getting someone who's used it for roughly 4 decades now and knows how to work with it properly. And you're getting that instruction as your mentor, someone who's applied it for 40 years. So that's the beauty of using this. We can show you the correct way to apply it to your personal trading. Okay. More questions about Thinkorswim. Yes, it does work with Thinkorswim, but the way Thinkorswim is set up, they won't allow us to apply the PET-D or strategy number 5 on their charts. That's not just us, multiple different indicators and different tools. So what they will allow us is for us to use their data on a NinjaTrader platform. So that's okay. We just give you the free NinjaTrader platform. We set it up for you free of charge, and you see perfectly what the PET-D and strategy number 5 look like. So there's no extra cost, and a lot of people, after they use NinjaTrader platform, are happier with that platform than with Thinkorswim. Okay. Is it available for MT4? Yes, it is. It is available for MT4. People are asking about the guarantee. See, there's not a really guarantee, because we're giving you all the information right off the bat. But if you're not happy with any product that we have, or any strategy or a course that you have, we'll give you 30-day exchange towards anything else, any strategy or anything else on our in our catalog. So this is one of the best. Go to the testimonial page, and you'll see how happy are and how consistent people are becoming for the very first time in their trading. Okay, and I'm sure you'll see after results and after I teach you these things that you'll be that happy as well. Okay. Let's see. It says, Steve, how many bars on 5, 15, 60-minute, etc. charts is needed to establish the prevailing trend? The PET-D only actually needs just, I would say, 2 or 3 bars. That's about it. All you need is about 2 or 3 bars. So you don't need to load up your charts, thousands of data. I showed you a lot of charts there, which only had maybe 6 or 7 charts prior to an actual setup being generated. So that's really about all you need. Okay, doesn't need a lot. Placidas, does the PET-D work on TC2000 charting software? I'm sorry, it's not available. But you know what? As we said, if you have a certain charting platform that the PET-D is not applicable with, or a strategy number 5 add-on, remember, we're offering you to try out PTS Primo Charts platform. It's a great charting platform for free for 6 months. So you can see it and see how well it works, and we can have you up and running in just a few minutes. But remember, this is available on a very limited basis, because this is something brand new, and we're allowing you to sample it for the current time. But we know a lot of people are interested. And you know what? I'd like to ask you a question here. This is the very 1st of March. Okay, we just started the 3rd month of the year, and I often have stated this at the end of our years, and everyone comes up with goals and aspirations for where they want to be in the new year. Everyone says, well, I want to be doing so much each month or each week. I want to be generating so much income, and I just want to be trading this much more, so that ultimately I can be making this much and self-sufficient. And I can almost guarantee you that no one is there yet. In fact, I can almost guarantee that the majority of traders are throwing in the towel at this point, because they're nowhere near reaching those goals. Now, if you really want to get up to that level of consistency, and if you want to be taught by someone who's been applying these same things for the last 4 decades, it's time to take advantage of this great offer. We're into the 3rd month right now, and you don't want to be at the 6th or 8th month of the year and finally decide, well, boy, I ran out of money, I can't start trading anymore. If you want to really get your trading back on course, it's time to have someone teach you these things that have stood the test of time. So even though there are no guarantees in trading, you can be taught information that has very high levels of consistency. And I really feel strongly it will turn your trading around. That's what we have in today's Candlestick Combo. One of our best and most consistent candlestick methods, that's strategy number 5, included with the PET-D. Okay, a great tool. So if you're interested in turning things around and getting your trading back on course for the next year, for the next, I'd say 10 months or so, while you still have time, it's time to take advantage of this, okay? And remember, I'll be there with you every step of the way. So there's the information you need. Contact Pro Trader Strategies. They're my sister site. They market all of my courses and all of my different tools. You can contact them by emailing them, or probably the best thing would be simply to call them. They'll answer any question that you may have, no obligation, about the PETD, about the different platforms, about applying it to your platform, your current platform. They'll answer questions about tech support, and they'll work together with you on that payment plan, okay? In conclusion, I just want to say thank you so much. I hope you got something out of this today. Even still, you can still apply this just as long as you know the best way to trade is in sync with the trend, okay? The best way is always to apply candlesticks in sync with the trend. If there's one thing I leave you with tonight, that's what you should be applying. That's the secret ingredient to candlestick trading. You will have a higher level of consistency. Now, the last part of that is, well, most people have a different way for finding out what the trend is. If you want what, in my opinion, is the best trending tool, you must be trading with the PETD. It's so popular in terms of its consistency. We have so many testimonials from people who have used it. It's the best tool I know of for finding out what the short-term trend is. All right, in conclusion, I want to say thank you so much. I hope you got something out of this today, and I really look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. We'll see you next time. Bye-bye.